Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here as always with
Dan Hussey. How's everybody doing today?
Dan Hussey. Today, we're going to talk a little bit about weekly update. We're going to talk a little bit about WASDE on Monday, what to look for there, and maybe even talk a little bit about cattle. But before we do that, what's the big weekend plan?
Ooh, catching me off guard. It's my father's birthday.
Happy
today.
birthday.
So yeah, we're going to be going out with Dan Sr. and
all
living
the
it
Dans.
up. All the Dans. Yeah, right. 3 generations of Dans now with my little one. Yeah, we'll be getting together with him, celebrating his birthday. So happy birthday, Dad. And yeah, we'll just some good family time.
Isn't that terrific? That's the way to do it.
Yeah. No big plans other than a old man's birthday.
Old fella's birthday. Well, happy birthday, old fella. Dan, we're going to have to talk about weekly market action. Not a tremendous amount of movement this week as everybody waits to see what's going to happen with the on Monday. Am I right about that?
Yeah. I mean, when you look at, even though markets like corn, you look at a weekly chart and you're like, oh, that's a nice up weekly candle. You take that step back, right? And like you're a whole lot of nowhere. I think markets were inside, right? Trade is the general idea here, and it's muted price action. We're going into probably the biggest report we've had in a couple months, where maybe all the can kicking we've had down the road after this government shutdown comes to a final close, and we get to wrap up what all of these numbers really are without any excuses that the government's not open to give them to us.
Yeah. Corn does a little bit of downside work. Opened 437 and a quarter, high 448, low 436 and a quarter. Last trade 445 and 3/4, up 8 and a quarter on the week. Funds long a current estimate 2,400 contracts.
Yeah, that's what I remember. We're still long in there. Really small kind of position, right? There's no commitment here, right?
Considering where they've been.
100%, right? So I think there's maybe some like money on the sidelines from that standpoint, right? Maybe folks waiting to come back in after the new year. And generally, you look at the weekly chart and we haven't started trending anywhere. So a lot of trend following systems have been turned off here. Today was lower low and lower high. You don't love to see it. It was a green close, but ultimately corn stayed above and closed above all of those moving averages that we like to talk about, that 150-day, 200-day, and the 18-day closing above all of those. So moral victory, even though we haven't gone anywhere going into next week's report.
Not exactly a ratcheting type trade action over the last couple of weeks, but at first glance, if you look at the way that this chart has been working, little move to the highs, back down, move to the lows, move toward the highs, back down and move toward the lows, move back toward the highs, back down, move toward the lows. And so we've really been traveling well-trodden ground here as the corn market awaits a reason to move in one direction or the other.
And before we get into those WASDE numbers here in a second, you can see that like volumes have been generally just lower. You are starting to see that peak in open interest in the March contract, and because we're getting into, I believe, that 40-day window when you typically see the roll start to happen. May is going to start coming up in volumes, and you're going to start to see some improvement there. Declining volumes in March, rising volumes in May. Take that what it's worth for the right now, because there's a roll that's starting to go forward. But generally speaking, that inside price action leaves you without much to really hang your teeth on. Corn production numbers, average analyst estimates coming in at 16.55 billion bushels. That's analyst trade expectations between 16.3 and 16.7. USDA's previous estimates coming in at 16.75. So a little bit lower. Trade's expecting a 200 million bushel drop there in corn production numbers. Yield 184. That's down from 186 in the last USDA report. Trade estimates between 182 and 186. So right in the middle of that range there at 184. Harvested area, 89.97 coming in, just shy of that 90 million acreage mark. USDA previous was just over at 90.04. Range estimates 89.3 to 90.5. So a full 1.2 million acres there of sway between high and low end of those estimates. Quarterly grain stocks for corn coming in at 12.96. These are the analyst estimates for WASDE, of course. And next week, 12.96 billion bushels. That's up from 12.075 in the last December report. And range of guesses here for corn, 12.05 to 13.31. So quite a big range there, like almost 1.3 billion bushels discrepancy on that.
Looks like the trade expects to have that yield reduction washed in the feed and residual, right?
Yeah.
So almost a push if they
Almost
do
a
that.
push.
If they do that in the feed and residual, 2 bushels per acre. So we'll see, I guess, what happens on Monday.
Yeah, and real quick, the South American numbers that we're going to be looking at too. Argentinian corn, we're expecting 53.63 million metric tons. That's up from 53, a 630,000 metric ton increase there. With Brazilian corn coming at 132.46, that's up from 131. So yeah, any type of little bit of change or maybe excitement you get from our U.S. numbers, those South American numbers certainly throw a little bit of a wet blanket on some of the maybe hopes for a real bullish figure here. But I will say that if the trade is expecting higher numbers and they don't come in like that, well, we have the catalyst for the breakout higher in corn. If things come in more bearish than what we see here, I think we have the catalyst for the breakdown in corn. We're in a range
set up that way.
Right? You're above 450 if things get bullish, and you're below 435 if they get bearish, because that's all the chart's been doing for the last month and a half.
In the bean market, we opened the week at 1045 3/4. The high was 1070.5, low 1045.5, closed at 1062.5, up 16 3/4 on the week. Funds, I believe, are short. No, I'm sorry.
No,
long.
they're still long. Yeah.
Long, 82,000 contracts. Yeah, I got that mixed up with wheat.
A remarkable amount of contracts for how far down we come, in my opinion.
For sure.
So I feel like that speaks to maybe why that 1040 area, this upward sloping trend line on the weekly charts, even down into oversold conditions, we are holding up on that number. Look at the increase in March soybean volume week over week. We were heading lower and volumes were picking up and the funds remained. So to me, that says this was not a burn it down sell-off. We saw that bean position certainly get tighter and shrink up as we headed lower over the last several weeks, but we did not see in any, in my opinion, real way funds give up that position. And they seem, in my humble opinion, to be now defending this upward sloping trend line down into that 218-day area. We settled up around that figure on the daily charts. Really would love to see them get back out over 1067. And was the 18-day there at, I think it's tied back there. It's at 1063. Closing back above that would be closing back above a 4-day high here. That's a technical signal that 100-day, 50, 55 days at 1080 and $11 above would very likely come in to match for maybe some resistance. And Joe, we've talked about some of these patterns like the head and shoulders that happened in beans before. Wouldn't you know it, if we bounced up into that area, we'd be forming a nice right shoulder with the upward sloping neckline right around 1040 and the left shoulders having formed back in July and September.
Yeah, it's funny that you should say that because I'm looking at it from the other angle. Head and shoulders bottom with that 1040 being the head, left shoulder here from December 19th and 22nd, and then that head, and then you're going to do some work here on the right side of this head and shoulders bottom as we go into next week. I don't know. It's an interesting formation here, and if it wasn't pre-report week, with the way that we're being capped by this 200-day moving average, what is that, 1067?
Yeah.
That 200-day moving average of 1067 concerns me. The fact that we don't want to do much work out above that, and the funds are long, 80,000 contracts. This chart, to me, is rather precarious. But if we, like you said, if we do get out above that 200 and we start to do some work toward that 1080, it's going to look real good real fast, don't you think?
It is. And let's keep things in perspective. We have been oversold on that daily going back to the start of November. So on that RSI, it's quite an interesting momentum study right now in soybeans. We had that, what ultimately can only be referred to as the false breakout towards 1060, because we clambered back down right into the middle of the range that we were in before. We haven't broken down out of that range. 1040 is now that figure, but into next week's report, right? I think everybody can make a case if things are or do want to be bearish. There's a technical setup on this chart for how you break down lower towards 10 or below. And there's certainly at this time support holding that would justify that run up to 1080, $11, maybe even above if things aren't as bearish as maybe they seem. Obviously, exports and other things are still on the question, but hey, soybean numbers coming out for this WASDE report certainly might help us determine where we could be. Let's take a look For our January estimates for soybean production, 4.22 billion bushels. Trade estimates between 4.176 and 4.3. Previous there at 4.253. So we are incidentally changing, right, the production number there on soybeans since our previous report. Market is looking for that 30 million bushel reduction, which when we take a look through the numbers, you can very quickly see that they could just be penciling and moving things around. Yield reductions down to 52.7 bushels an acre. That's down from the 53 round number we got in our last report. Analysts only willing to take this down to 51.9 in their estimates, and high side of 53.5. Analysts obviously expecting a little bit lower, but not aggressively lower, and still not cracking below that 51 mark, and barely willing to say below 52. Harvested acreage, 80.28 million acres. That is slightly lower than our last estimates of 80.31 that the USDA gave us. And trade estimates only willing to go as low as 80 million acres, with 80 million and a half to the top side on that estimate. Quarterly grain stocks for beans coming in at 3.25 billion bushels. That is up from 3.1. I wasn't able to dive too deep into it, Joe, but did you see anywhere where they may have been doing that? It's probably feeding residual increases and maybe a drop in exports, but don't quote me on that. But my guess is that's where that number is getting beefed up from.
I do not see.
In my humble opinion, the logical thing there is exports, but I don't want to make assumptions and mislead people. But we'll have to dig deeper into that number. And certainly when we're reporting this stuff next week is when it really matters anyway.
There is talk that they will reduce exports by 50 million.
Yeah. And okay, so the number here is a little bit heavier than that, but okay, we would only expect it to bump up, but maybe 3.15 billion bushels and not 3.2. But hey, even the analyst trade estimates though on that, 2.95. Some people do think we're going to drop considerably, probably to the high end there, 3.45. So I feel like that 500 million bushel sway in that quarterly grain stocks number is really contingent on maybe analysts not being able to figure out where exactly we are in the export game.
Yeah, they're not the only ones, huh?
It's how it is.
Market kind of holding up rather well too, considering that we're rumoring a total of 1 to 1.5 million metric tons, and so far we've only got a third of that confirmed. Right. Market seems to be hanging in there pretty well. Maybe because there's a report coming. I don't know why the market seems to think that they'll get better information next week about how much the Chinese have taken. It almost feels like they expect the Chinese will have taken more than those rumors, but I guess we'll have to show up and see.
Yeah, we will. Argentinian production and Brazilian production numbers here for soybeans coming in at 48.53 million metric tons for Argentina. That's only 0.03. That's like 300,000 metric tons increase over the 48.5 we had in our last report. Analyst estimates are 48 to 49 there. Nothing screaming at home. Soybean production in Brazil, though, up 1.35 million metric tons from last report, 176.35 million metric tons there, up from 175 in our last report. And analyst estimates there do have a 4 million metric ton sway on how good that bean crop is, 175 to 179. So yeah, I think there's some room on both the international numbers, right, and our domestic balance sheet here for some clarity from the USDA, which soybeans, like corn, seem to be waiting for.
March wheat opened the week at 507 and a quarter. The high was 522 and 3/4. Low 505 and 3/4. Last trade 517 and a quarter, up 10 and 3/4. Funds remain short about 86,000 contracts in wheat, daring the market to give it a reason to cover those 86,000 contracts, which we have not seen yet. Questions surfaced. U.S. crop conditions coming in lower. Global stocks expected to be higher. We'll see which one of those sides of the rope wins out, huh?
Yeah, wheat now, a little bit of a move higher, right? Week over week. In the wheat, and on the daily chart closing back above that 18-day moving average is a good start from a technical pattern. That fund position, which screams we're not at a max or record short there, but it definitely screams oversold conditions. And the rally we've seen in the last couple of days off of the lows certainly seems like a pretty strong or good move at this point, that a reversal to find where resistance is up into that 55 or 100-day moving average around 533 could be on the docket. We can't ignore that failure to get out over the highs there from 1226 in December keeps a little bit of a bearish tint on this chart. But yeah, so far, right, it seems to be unable to crack that $5 figure.
Bounded by the 10 and the 18-day, converging underneath, bounded by the 150, converging above, 513 down low, 533 up above. You would guess that those are two, while simple, two pretty solid lines in the sand. We get back down below that 10 and 18-day, you got a problem. You get up into that 533, things could be turning up. There is fuel for the fire, and we hate to keep trying to hang a hat week after week on that fund short position, but it is dry kindling, and if there's a spark, you would expect that might catch.
Yeah, it definitely could. Wheat numbers here coming in for our WASDE estimates. The average trade estimates for our quarterly grain stocks, 1.63 billion bushels. That's up from 1.573 in the December report. Trade estimates coming in at 1.590 to 169 there. Analyst estimates for winter wheat seedings here are all planted acres on wheat, 32.41 million acres. Hard red coming in at 23. Soft red winter coming at 5.9 million acres, with white winter coming in at 3.44. Those seedings are all generally up from last year's estimates. And the trade actually is pretty, in my opinion, pretty tight on all of their estimates there. And we'll see if that continues to play out. World ending stocks on wheat, and I forgot to give corn and beans here, I guess, too. World ending stocks on wheat coming in at 275.9 million metric tons. That's up about 1 million metric tons from our last estimate. Corn, world grain ending stocks coming in at 279.362 million metric tons. That's up from 279.15. And soybeans, 123.07, up from 122.37.
Weekly fats, still looking at February as the open interest and volume remain higher in February as opposed to April, but April coming up right away. Open the week in February, 236.67.5. The high was 237.45. Low, 233.12.5. Last trade, 233.72.5. That was down to 27.5 for the week, courtesy of today's weakness, I think, in February live cattle, which was off 155 on the day. New highs for the move, but we came back into previous price action. A market that could probably use a bit of a pullback, wouldn't you say?
Yeah, I think so. We may be making a bit of a pennant and a bull flag here after quite the V-shaped recovery off of those 205 area lows. We filled every gap except for that one that we still have way up there off the highs themselves. Who knows how long that gap could really stay on the charts, but certainly in this move higher, a lot of people will start talking about targeting that new highs, right? The market's cooled off a little bit, though, here the last few days, staying above the 100-day and 18-day moving average now around that 231 area. Wouldn't be surprised to see tests even back towards that 55 or 200-day, like at some point, right, if this market really wanted to have a correction period of price discovery lower before heading higher. But yeah, otherwise, cattle charts have looked really strong and resilient in the face of potentially starting to run out of steam here. They haven't just fallen apart, and the uptrend still very much looks intact.
With the talk of further screwworm cases this week being identified within a couple 100 miles of the U.S. border, it looks like we're pushing any kind of border opening for feeder cattle out into the future. Some months, right? The sterile fly facility, about 50% completed, they report. That'll have to be all the way done, and those sterile flies out doing their good work. So if you take away the threat of opening the border, and then you turn toward the increase in imports of beef into the United States, really, though, barring some sort of black swan event that impacts the economy significantly, those are really the two wild cards, in my opinion. Wouldn't you think?
Yeah, I think so, right? And those are headlines that we just don't know how the shoe can drop on, but we need to be aware of their potential implications, right? Cattle has a very, very, very big range to trade in, both feeders and fats. We carved out an all-time high, and we had a very solid pullback to see where buyers were to stop that downtrend. we have recovered over 50% of that decline at this point. So there is still all the concerns we had on the table a few months ago. It's just a matter of how the market is really pricing these things out, willing to like absorb the new information. And some of it goes stale. But like you said, screwworm pops back up. We got to pay attention.
You see it in the strength in the feeders. We opened the week in March. Feeder cattle, the high was 354.90. The high was 359.40. Low trade 353, 12 and a half. Closed at 354.70, up just 175 on the week. Kind of a wait and see week in feeder cattle, but we are due, right? We have been very strong for a number of weeks. 1, 2, 3, 4, 5. Most of those 2, 3, 4 of those weeks traveling pretty significant ground, filling gaps, getting almost back. This 359.
I mean, look how close you are back to that high.
Exactly, right? That 359 represents a week away from the 378 high here. And so feeder cattle could probably use a bit of a pullback. Maybe we're not going to get it. Maybe this is as good as it is while feeder cattle catches up to what the fundamentals are telling us, right? We really are still doing pretty bang up business in feeder cattle in terms of what it costs to re-up.
100%. And I put a box on the chart here that inside that box, if we were to pull back, there's a lot of technical reasons I can find. You're pulling back to test the old gap in this little consolidation area or where we found a little bit of resistance and went through. So it's price discovery wise, the market would be pulling back into that 155-day moving average area. We ironically don't have enough time just on the March chart here to get a real good 200-day, but I would imagine it's just below somewhere around 330 or something. But the point is, Joe's making a good point, is like a nice solid pullback into this type of area. You find support and it starts to head higher, you're going to start having that conversation about getting to the gap above or a new all-time high very quickly.
And we may not get it.
You're right. You may not.
You watch this. You look at this chart.
Few days of really holding up here.
You got to be in to win here on a market like this. And feeder cattle, under these circumstances, has been that way. On the previous run up, they gave you precious few opportunities to catch a comfortable pullback. And this is a tough spot to trade, right? If you're not already in this and you're not willing to just close your eyes and buy, this may be one of those that get away from you. Mm-hmm. But it's still, to me, very interesting once I pulled up this daily chart to see the strength that this market has exhibited since that big fall off.
Yeah, we went, it is crazy how far down we went. Feeder cattle's going to zero, never going to be worth anything ever again. Ever. And then zip back into overbought conditions and have stayed there. A very strong, resilient market that has come right back up. And like Joe and I will continue to harp, there's a big range for cattle to now play in. And there's a lot of news that can come out to drive it in both directions in this range. I do think pushes up into new all-time highs. Like, let's just play the tape forward if we get there. I do think you have to be cautious of big sell-offs because those are big numbers up there that I think everybody will chomp again to try to sell into. But we're not planning necessarily for that right now, but wouldn't be surprised if it happened at all.
For sure. Eyes forward on feeder cattle and live cattle.
Well, that about wraps it up for us today. So thank you for listening to the Zaner MarketCast today. If you need more because you just can't get enough, follow us on Facebook and Twitter and LinkedIn at Zaner Ag Hedge, and follow along with our hotline that you can get signed up for at the bottom of this video. Thanks so much for joining us. Have a great weekend, everybody, and we'll be back with you as price action develops.
Have a great weekend.
All right.